Hey guys, welcome back to the channel. In this video, we're going to go over some technical analysis on the S&P 500, on Tesla, Amazon, IQST, and of course, Zion Oil and Gas. Before we do, just to reiterate, I'm not a financial advisor. Make sure that you do your own research. Also, if you find value in the video, smash the thumbs up button, subscribe to the channel if you enjoy our content, hit the notification bell. That way YouTube can let you know every time we release new content. So let's dive into it here, guys. S&P 500. We are, in my opinion, poised for more downside, and here's a couple of reasons why. This golden cross breakout indicator, anytime the blue line and the red line coincide and they cross up, if the red line is above the blue, or basically if the blue goes below the red, we see some downside coming, and that's a pretty large gap that we have in between them. And plus, the RSI and the MACD both are showing that we are poised for some more downside. Right now, we're at a crucial level of 4302. I think that we could retest the 4200 before settling back out and maybe trying to make our way back up. Okay, as you see here, the MACD, we crossed from bullish to bearish. So I'm kind of, in my opinion, I think that we do have some more room for downside here. And so I have not bought any more Amazon or any more Tesla at this time. I'm awaiting because I do think that I'm going to get it cheaper than what I'm looking at here. Okay, and the reason being the war that's going on with Israel currently now. It's typically wars are inflationary, so the inflationary numbers, although have cooled down, I think that we do see some things start to kind of spike back up, which in return is going to kind of have some effects on the markets, which will push the prices down again. The longer term things, such as IRAs and things of that nature, I'm just obviously just buying consistently there. But my individual stocks, I'm watching because I think that I can get them cheaper than what I'm looking at currently. Once I feel like the market has had a really big downside move, and feel like I maybe be comfortable coming back in, I may take out some options at that point. But right now, 4302, your current level of support. Other than that, 4207, then 4113, 3979, your bottom at 3808. First level of resistance, 4418, 4600 at the very tip top. But I do think, again, I think that we are poised for some more downside, whether it be today or at some point during the week. Okay, so next up is Tesla, ticker symbol TSLA. So we're going to take a look at old Tesla here, and kind of the same thing here. It's going to look, all the stocks are going to look pretty similar to kind of how the market looked. Of they hit a certain point and then they had some downside here. And the golden cross breakout indicator, they have not crossed yet. It shows that the blue is still above the red, but however, if we do see some more downside, maybe down to like actually this indicator did come up here, so that does typically signal that we're going to see some more room for downside. So your first level of support, 242.91, and then from there for Tesla, you're looking at 225. If I tell you now, if it gets down to here to 225, then I'm coming in and I'm buying there to average down for my longer term position. Okay, and the only thing that makes me feel that we may not get there to 225 is we are pretty much at undervalued levels here. As you see a little bit further down, then we'll be at undervalued levels, and the pattern that we have here, the W-shaped double bottom, typically signals that we're going to temporarily spike up in price. So we'll have to kind of see how that works out. But 264.46 is your current level of resistance for Tesla. All right, guys, looking at Amazon, ticker symbol AMZN, and this one here, we were actually right at about overvalued, and now we're kind of cooling off. 124.03 is your first level of support. 132.51 is your resistance. Below 124, you're looking at 117, 110, 188. 124 or below is where I'm a buyer at, and that's just my personal preference, just because that's where I started to kind of build my position out on this particular stock. So if it goes below that, even better. If it hits there and bounces up, then I'm just holding because I know that I'm still in the money. and I'm just holding on to it. So just kind of keep an eye on it. I do think, like I said, we are poised for some more downside, maybe sometime in the 110s, closer to the 110, before making our way back up. So I'm kind of keeping an eye on it and kind of go from there. So next up, guys, we're going to look at IQST, which is our OTC stock that we follow here on the channel. So I need to draw the fib level here. Let's see, it's made a decent recovery from 8 cents, it seems. So 33 and some change is our tip top as we're looking here. If I can get it to, there it is. All right, so at one point we're all the way down to 8 cents, and we hit 33 cents. We're currently at about 23. This one here, seeing if we can hold at about the 23 to 24 level. If we can't, if we keep coming down, you're looking at 20 to 21 cents as your support. Past that point, you're looking at about 18. First level of resistance here is about 28, and then your overall tip top again is 33.5 cents. So that's something to keep an eye on here. This stock here, ambitions of being uplisted to the NASDAQ eventually, and you know, I know there's certain requirements that they have to hit, and one of them is share price. So this stock here, do some research on it. I'm not going to go into a full blown out research of it, but I am bullish on this stock longer term. I don't hold an exceptional amount of shares in it, but I do hold enough to make a difference to where whenever it does decide to hit and, you know, get back into, you know, dollar or a little over $1, that it'll definitely do me some good, and I'll probably look to take some profits off the table at that point. Maybe hold a little bit for the longer term, but overall I think $1 is going to be about my first level of sell and take profit spot there. So of course, Zion Oil and Gas here, it got all the way up to close to 10 cents and then fell right back down. And of course, obviously with all the things going on with Israel right now, I think there is a lot of uncertainty with this particular stock. And but the good thing, the company's actually updating us fairly regularly, as far as at least from last week. Sent out several emails kind of letting everyone know what's going on, everyone's safe and things of that nature. But at this point, you just don't know really what's going to happen, and not only with, you know, with the company, but just in general with the country. Okay, so this is a very risky play, in my opinion, for someone who's just coming in to try to start investing. If you do it, then you definitely don't want to, you know, put your whole life savings into it. And I know some people are starting their position that are just putting, you know, a few bucks here and there to kind of start adding a little bit of skin in the game. But it's one to keep an eye on. I do think that, you know, once everything hopefully settles down in Israel, they can get back to work. And above all, you know, you want the country to be able to just function and not have to worry about what they're going through right now. But your first level of support, 7 cents, resistance 8 3/4 cents, and then at about 9 cents, 11 cents, 12.5, and then 15 is your overall tip top level. So I honestly think that we go down back to 5 cents at some point. I really hope that I'm wrong, but I do feel like we do go back down to about 5 cents and settle, and then kind of go from there. But I think the conflict in the Middle East is going to be a big factor in the direction of this share price for minimum the remainder of the year and into early 2024. So that's just my personal opinion. But anyway, guys, that's all I got for you in this video. Let me know your comments below. Other than that, we'll catch you in the next one.